Aloha, everyone. Welcome to Java, and thank you for joining me. This is for Monday, November 6th, 2023. So, as we start this morning, risk level has come down quite a bit. This is still due to the jobs report on Friday, that it was weak job numbers. So, basically, telling that the Federal Reserve will continue to either hold their interest rates, at least not hike for the time being. So, starting with our favorite risk indicator, the MMRI, it's still right below 300. So, we're in that high level where it's still a danger zone for, of course, black swan event, but it's come down quite a bit. And I think this will continue for some time, unless, of course, something happens. So, we've got the two main elements: the 10-year yield and the relative strength of the dollar both came down significantly. So that 10-year at 4.59, well below the 5%, that was quite a precipitous drop. However, that the markets love that, as they don't like being around that 5%, and everything went green. So as stocks are heading higher, we're also watching futures still indicating that we're in a risk on environment. So even though we technically hit a recession Friday, we're in a risk on environment. Money is shifting because people don't trust where it is, and they're kind of gambling, putting it into the stock market because they know that the value of the dollar will be uh, continuing in the downward motion. So we've also got oil is moving up above the $80 level. It's 81.61 per barrel at the moment. There's a couple of reasons for that we'll go over. So for our calendar is really pretty light today. Got it. Federal Reserve President Cook speaking. On Tuesday, we're looking at a trade deficit, but really nothing huge. And then consumer credit at 3 p.m., which is just in ridiculous levels right now. However, I don't know that that will necessarily be a mover, but at the moment, that's one of the larger numbers we'd be looking at between today and tomorrow. So moving on, I wanted to talk about oil because it is moving up, and this is because Saudi and Russia are sticking to their cuts, as they say they're going to continue to restrict the supply. And how this has kind of been playing out as kind of trade game that's been going on. The Kremlin even admitted their surprise at their growth of their economy. So there have been a couple of things playing on this. First, the sanctions and the cap at $60 per barrel. That really boosted their economy because it was supposed to restrict their sales, but what it ended up doing was making them sell it for a much higher price on the black market. Basically, Europe is still basically forced to buy because they don't have other areas, they don't have alternatives. So they had to purchase the Russian oil through third-party sellers, mostly India, and then also some through Africa, as we spoke about before, and pay a higher price. Well, Russia benefited from that. The It's this next one saying sanctions failed to bring Russia to its knees as was intended. And then also on the back of that, their biggest automaker is reporting the highest sales in a decade. So their economy is doing quite well. They've also been stashing gold with their central bank. So they're in a much stronger position than when these sanctions began. So that's just went through this why the West Russian oil price cap is not working. And now we've got the EU chiefs, so uh, they think that they're going to start new sanctions on Russia because they think that this time is different. And they've shown that sanctions in general, especially in cases like this, don't work. So they're sanctioning other goods, and businesses are beginning to pull out of Russia, and Russia is closing them down or locking their methods of making money in return. So they're just kind of shooting themselves in the foot, if you would. So, and this is the EU President Ursula von der Leyen, in case you don't know, but they're talking about more sanctions. Okay, so moving on to a little more of how this currency war is currently playing out on the global front. So the reason I bring this up is because this is also affecting trade and will in turn on this macro level will affect the purchasing power of your dollar down the road. And it's basically, we're heading towards the dollar is losing value. We've got a currency race to the bottom, and this is what central banks do. And I just want to shed a little light on behind the scenes what's actually going on with these stories and why. So we've got the dollar extending the drop. It says remaining vulnerable after the Fed steer basically pausing on the rate hikes. So dollar losing strength means that people want to put their money and trade it for something more valuable, which is causing the stock boom because equities are seen to hold more value. And this will continue. Even though we're in a recession, things are going down, the money is just moving. So it's moving into stocks, moving into commodities, precious metals, gold, silver, and cryptocurrencies we'll see in a bit. So with this happening, we've got China's first deficit in foreign investment, signaling the West's de-risking pressure. So what this means basically is they traded less in dollars. They've been trading in their native currencies directly with Russia for the oil and other goods with South America, as well as other partners, Malaysia. They've all made these agreements to trade outside of the dollar. So this in turn has weakened the dollar. So now that they've basically sold off their dollars, now dollars are cheap. I expect China to start purchasing dollars back because they will need them still for some time for the trade. And this is how they devalue their currency further. So now that they can get more dollars for their yuan or for their goods, they're going to either sell more and trade for the dollars on the cheap. We've got South Korea. So they had issues with their stock market and losing value. So they just decided to put a short selling ban. So what this did is basically, if you can't sell your stocks, you can't sell your stock short. All you can do is buy. Well, of course, that is creating a boom in their equity prices too, because they want to stay, when they mean staying on a level playing field, they mean to keep their equities up with value with the US, basically. So ban short selling, this is going to cause a squeeze. So they're green at the moment, but I don't expect that to last because it has no basis. We've got Barclays saying that they see the Fed raising a rate in January instead of December. We don't know. We'll see. I see there is still possibility of rate hike because of the pressures with oil. We'll see what happens with the oil prices and if that really raises significantly, because the oil price going up increases inflation, and that it puts them in that sticky position where they have to choose. So moving on to banks. On our side, Silicon Valley Bank was not a one-off. Many more will fail. We've been discussing this. Banks are very weak, and with the higher interest rates that they're paying out through their short end, so they've basically chosen which banks are more exposed to this and which ones have basically lower risk exposure. So there will be more fail. There's quite a few more banks that will fail moving forward in the US. And possibly also what I'm expecting, there's a couple of larger banks that are also in trouble, namely Wells Fargo and Bank of America. And my only question is one of them, if not both, will likely get bailed out, and the other may merge or get bought pennies on the dollar or quote unquote restructure to where they're going to have to get loans from the government to get them bolstered or however they may do that. So we'll see what happens moving forward. And meantime, by contrast, Singapore, which has been getting the benefit of a lot of these trade deals, has now their profit jumped 17%. So this is just showing, it's one more indicator of the differences in currencies, the trades, and what's really going on. This is monetary war. So moving on to a couple of stories. We've got Tesla. They're talking about building €25,000 car in Germany. This would bolster Germany's output if this is true. At the moment, Germany is still kind of tied into purchasing Russian oil for their production purposes. So We'll see how this plays out. And then also kind of related, Elon Musk decided to integrate artificial intelligence with the social media platform X, which was formerly Twitter, as most of you know. I am also on Twitter, and I have been doing more updates there because it's much easier throughout the day. So if you happen to be on that platform, please look up. I've got a link in the description. If you would like to follow me, that would be great. I would appreciate it. If you would like updates, it's free. It's my final thing I would like to bring to you. And none of this is financial advice. You have to do your own research. Please check me on anything. And if you have comments, leave them below. If you think differently on anything that I think that's wonderful, please give me your view. But what I want to bring up is the Coinbase user agreement dispute. And they're talking about this in the Supreme Courts. There's a lot of things going on between them, talking about regulation and all of these ETFs coming out. But one thing I wanted to bring up is that while this is all kind of wrapped up, and I'm not necessarily a huge fan of Coinbase, but at the moment they are the big guy out there. And as we're looking at them putting through all of these ETFs for cryptocurrencies, one of the small lines in there is that they must choose an exchange. And currently, Coinbase is basically the exchange. There's not a lot of competition, and they're the only ones that can kind of follow through with this scale. So, long term, we're not talking about day trade, not talking about that for today, but something to look down the road, just to be aware of that at some point in time, if that happens, they approve these ETFs, they're going to take Coinbase along with it to the positive side. So I wouldn't, if you're shorting things, I wouldn't short Coinbase. A little scary with that one. So with that, I wish you all a green trading day, just a wonderful day in general. And until I see you again, my friends, stay free.